The crash of September 2008 brought the largest bankruptcies in world history, pushed over 30 million people into unemployment, and brought many countries to the edge of insolvency. Wall Street turned back the clock to 1929.
The tremendous crowds which you see gathered outside are due to the greatest crash in the history of the New York Stock Exchange.
After the Wall Street crash of '29, which led to the Great Depression, the U.S. Congress launched an official investigation.
Interest in the senatorial bank investigation as J.P. Morgan arrives to testify.
J.P. Morgan was among the business titans to be called to account by the Pecora Commission. Flash photography was introduced to heighten the spectacle. In 2010, the same model is followed for a new investigation of a new financial collapse.
Panel, ladies, photographers, move aside.
Former California Treasurer Phil Angelides is chairman of the Financial Crisis Inquiry Commission.
I'm honored to welcome you as we start this series of public hearings into the causes of the financial and economic crisis.
He has taken sworn testimony from a parade of government and bank officials, trying to get to the bottom of what really caused the 2008 meltdown.
The consequences of this financial crisis have been grim also. 27 million Americans who are either out of work, can't find full-time work, or have stopped looking for work. Millions who have lost their homes, and millions more who are in the foreclosure process. Trillions of dollars of wealth loss. I think one of our jobs is to try to rationally explain to people what the heck happened. People want to know.
How did it all go so wrong? The key trigger of the 2008 financial meltdown was easy lending in the U.S. housing market. In an era of very low interest rates and reduced bank regulation, there was an astonishing building boom across the United States. In California, banks decided that virtually anyone could qualify for a home loan. Jim Kling has been a real estate agent in San Diego for over 20 years.
Really, in 2004 and 2005, if you could fog a mirror, you could get a loan. That's how bad it was. They didn't really know or care about the qualifications of the buyers.
And a payment on that.
And whether those people could make those payments or not apparently wasn't much of a concern.
Bills getting to be more than you can manage? Crossroads Mortgage has a whole range of solutions geared to people just like you.
So if you're thinking of buying a home or refinancing?
Even if your credit is less than perfect, AmeriQuest can help. Call 1-866.
Banks began making what were called subprime loans to people who could ill afford to pay back the money, especially if house prices ever went down. The one man who could have stopped that practice was then U.S. Federal Reserve Chairman Alan Greenspan. For 20 years, the world's most powerful banker. Greenspan was revered in Washington. His power feared even by presidents.
The Federal Reserve was the one agency that had the full authority to regulate subprime lending. And despite all the evidence, despite all the yellow and red lights going off, they chose not to.
Staff reports. I mean,